There are 12 specific bills, fees, and charges that American seniors are legally entitled to reduce, eliminate, or get help with right now in 2026. And the honest reality is that most people watching this video are only aware of 2 or 3 of them. I want to walk through the complete list because some of these are well known and several genuinely aren't, despite representing real, recurring money every single year. I'm Linda Foster, and let's go through all 12 clearly. Number 1, federal income tax through the new senior bonus deduction. If you're 65 or older, you can now claim an additional $6,000 deduction on your federal return, $12,000 for a married couple where both spouses qualify. This is on top of the standard deduction and the existing additional senior deduction that's always existed. For a 72-year-old individual filer earning $70,000, this combination brings their total deductions to $23,750, reducing their taxable income to roughly $46,250. The deduction phases out gradually above $75,000 for single filers and $150,000 for joint filers, and it's available whether you itemize or take the standard deduction. This runs through 2028, so if you're 65 or older and haven't confirmed it's correctly applied to your return, that's worth checking immediately. Number 2, property tax through senior exemptions, freezes, and deferrals. This is genuinely one of the largest and most underused categories on this entire list. At least 39 states plus Washington, D.C. offer some form of property tax relief specifically for seniors, yet none of it applies automatically. You have to know it exists and file for it yourself. The relief comes in roughly 4 forms: a flat dollar exemption, subtracting a fixed amount, commonly $10,000 to $75,000, from your home's assessed value before tax is calculated. An assessment freeze, which locks your taxable value at its current level, so rising neighborhood values don't increase your bill. A deferral, which postpones payment entirely until the home is sold or transferred, with interest accruing at rates as low as 0% in Vermont or around 5 to 7% in other states. And in a smaller number of states, a near complete or full exemption, such as Alabama, where seniors 65 and older are exempt from the state portion of property tax entirely. The typical annual savings from a senior property tax exemption on a median-priced home ranges from roughly $1,200 to $4,800, depending on your specific state and program. Over 20 years of retirement, that's $24,000 to $96,000 that stays in your household instead of going to the tax office. Number 3, Medicare premiums through the income-related monthly adjustment amount correction. If you retired recently and your Medicare premium is still based on a higher income from 2 years ago, Form SSA-44 lets you request a recalculation based on your current, lower income. This isn't automatic. You have to file it yourself, citing your retirement or other qualifying life event, and it can reduce or eliminate the surcharge you've been paying unnecessarily. Number 4, federal income tax on Social Security itself through combined income management. Your Social Security becomes partially taxable once your combined income, your adjusted gross income plus tax-exempt interest plus half your benefit, crosses $25,000 single or $32,000 married. The new senior bonus deduction, by reducing your AGI directly, can push your combined income back below that threshold entirely for some people, eliminating Social Security taxation that would otherwise apply. This is exactly the kind of detail worth running through an actual calculation rather than assuming it doesn't apply to you. Number 5, vehicle registration and excise fees. A genuinely large number of states offer reduced vehicle registration fees for seniors, often starting somewhere between 62 and 65. The specific discount varies considerably by state, from a flat percentage reduction to a fixed lower fee tier. And it's frequently missed simply because renewal notices don't always prominently flag the senior discount option. Checking your specific state's Department of Motor Vehicles website for a senior or reduced fee registration category is worth doing at your next renewal. Number 6, hunting and fishing licenses. Nearly every state offers significantly discounted and in some states completely free hunting and fishing licenses for seniors, typically starting at 65, sometimes earlier for lifetime license options. For seniors who enjoy these activities regularly, the annual saving compared to standard adult license fees can be substantial, and many states also offer a one-time lifetime senior license that costs less over time than paying the standard annual fee year after year. Number 7. State and local sales tax on specific purchases in certain states. A smaller number of states offer senior-specific sales tax exemptions or rebates, particularly on prescription medications, certain medical equipment, and in some jurisdictions, general purchases up to specific limits. This varies enormously by state and is worth a direct check with your state's Department of Revenue, since it's genuinely one of the least consistently publicized exemptions on this list. Number 8. Public transit fares. Most major transit systems across the country offer reduced fares for seniors, typically 50% off standard fare, starting at $65 in most systems, sometimes $60 or $62, depending on the specific city or county. This requires obtaining a senior transit card or ID, which usually involves a one-time application with proof of age, after which the discount applies automatically going forward. Number 9. National Park entrance and recreation fees. The America the Beautiful Senior Pass, available to U.S. citizens or permanent residents 62 and older, provides lifetime access to over 2,000 federal recreation sites, including national parks, for a one-time fee of just $80, or $20 annually if you prefer the yearly option. Given that a standard annual park pass costs $80 on its own, the Senior Lifetime Pass essentially pays for itself after a single year of regular use, and then provides decades of free access afterward. Number 10. Court fees and filing costs in select circumstances. Some states allow seniors with limited income to request a waiver of certain court filing fees, particularly for matters like name changes, simple estate filings, or small claims court, through what's typically called an informa pauperis or fee waiver request. This is narrower and more situational than the other items on this list. But for seniors on a fixed income who need to navigate the court system for a specific reason, it's worth asking the court clerk directly whether a fee waiver application is available. Number 11. Property tax circuit breaker credits, separate from standard exemptions. Several states, including Kansas, Connecticut, Maine, Montana, and others, offer what's called a circuit breaker credit, which refunds a percentage of property taxes actually paid based specifically on your income level, rather than simply reducing your assessed value up front. Kansas, for example, offers the Safe SR program, refunding 75% of property taxes paid for eligible low-income seniors, with the household income limit for the current tax year set at $25,380. This is genuinely distinct from the standard exemptions I mentioned earlier, and seniors in states offering both often qualify for one, but not necessarily realize the second, separate program exists. Number 12. Utility assistance through the Low-Income Home Energy Assistance Program. LIHEAP provides direct financial assistance toward heating and cooling costs for income-eligible households, with seniors representing a significant portion of beneficiaries nationally. The program is federally funded but administered at the state and sometimes county level, meaning eligibility thresholds and application windows vary by location. If you're managing a tight budget around utility costs specifically during extreme summer or winter months, contacting your state's LIHEAP office directly, rather than assuming you wouldn't qualify, is worth doing before the next seasonal application period opens. Now, let me go a bit deeper into the property tax category specifically, since it's genuinely the largest dollar item on this entire list and deserves the most careful explanation. The application process generally follows the same pattern regardless of which state you're in. You'll need a government-issued photo ID to prove your age, your prior year's tax return, or Social Security statement to prove income where the program is income tested, your deed or mortgage statement to prove ownership, and a recent utility bill or voter registration to confirm residency. Gather these documents, then file before your specific state's deadline, which varies considerably, some tied to the general tax year, others tied to the property assessment appeal deadline. After filing, follow up directly with the assessor's office to confirm your application was received and processed, and check your next tax bill specifically to verify the exemption actually appears. If your application is denied, you generally have the right to appeal, and in many cases, a denial reflects a simple paperwork issue rather than genuine ineligibility, which means requesting the specific reason for denial and correcting it is often all that's needed. I want to flag the single most common mistake people make with this category, because it genuinely costs people money every year. Assuming the exemption applies automatically once you turn the qualifying age. It does not in any state. You must actively file, and in states with annual recertification requirements, you must refile every year or risk losing the exemption without any prior warning, since most assessors' offices don't proactively remind you when a recertification deadline is approaching. I also want to mention something specific about combining strategies, since this is a detail genuinely worth understanding if your home's value seems disproportionately high relative to comparable properties nearby. A senior exemption is a fixed reduction applied regardless of whether your underlying assessment is accurate. If your property is overassessed to begin with, the exemption reduces the bill slightly, but you're still being taxed on an inflated base figure. Filing a separate assessment appeal, correcting the underlying value, and then applying the senior exemption on top of that corrected figure delivers meaningfully larger combined savings than claiming the exemption alone while leaving an inaccurate assessment unchallenged. Let me close with the complete list one more time, briefly. Federal income tax through the senior bonus deduction. Property tax through exemptions, freezes, or deferrals. Medicare premiums through SSA-44. Social Security taxation through combined income management. Vehicle registration fees. Hunting and fishing licenses. State sales tax in select states. Public transit fares. National park fees through the senior pass. Court filing fees in specific circumstances. Property tax circuit breaker credits as a separate program from standard exemptions. And utility assistance through LIHEAP. 12 specific opportunities, none of them automatic. Every single one requires you to know it exists and take the step of actually applying. If this was useful, share it with someone you love who's over 60 and who may be paying full price for several of these things without realizing exemptions or discounts genuinely exist for their specific situation. Let me go considerably deeper into several of these because the specific mechanics genuinely determine whether you successfully claim these or leave money behind. On the senior bonus deduction, I want to address the cascading effect that makes this deduction worth more than its face value for some people. Because it reduces your adjusted gross income directly, it can also reduce your combined income calculation for Social Security taxation purposes simultaneously. And it can reduce your modified adjusted gross income enough to drop you below an IRMAA threshold for Medicare premiums. For a senior whose income sits right at the boundary of one of these thresholds, the same $6,000 deduction can trigger 3 separate benefits at once. Direct tax savings on the deduction itself, elimination or reduction of Social Security taxation, and elimination of a Medicare premium surcharge. This is exactly why I'd encourage anyone newly eligible for this deduction to have an actual conversation with a tax professional about the complete picture, rather than assuming the headline $6,000 figure tells the whole story. I also want to mention something specific about the timing of this deduction for anyone who turns 65 partway through 2025. The eligibility rule is based on your age as of December 31st of the tax year, not prorated by month. If you turned 65 at any point during 2025, even in December, you're entitled to the full $6,000 deduction for that entire tax year, not a partial amount. Some tax software or preparers unfamiliar with this specific provision have incorrectly prorated the deduction for people who turned 65 mid-year, which means if your return shows a reduced amount and you were 65 by year-end, that's worth correcting through an amended return. On property tax specifically, let me walk through several state-specific examples in more detail, since seeing concrete numbers from real programs makes this category considerably more tangible than general percentages. In New York, under recently signed legislation, localities now have the option to offer senior homeowners a property tax exemption of up to 65% of their home's assessed value, up from the previous 50% maximum, effective for taxable years beginning January 1st, 2026. This could save the average qualifying senior roughly $300 per year, though local governments must specifically choose to adopt the higher exemption level, and income eligibility limits are set locally rather than statewide, which means checking with your specific town or county assessor matters considerably here. In Texas, there's a proposal under discussion called Operation Double Nickel, which would lower the qualifying age for certain property tax benefits from 65 to 55. I want to be clear this is a proposal under consideration rather than enacted law as of now, but it's worth watching if you're a Texas homeowner approaching either age threshold. In Washington state, the senior exemption operates on tiered income thresholds that vary by county, ranging from roughly $36,000 in some counties to over $80,000 in others, reflecting local cost of living differences. For seniors whose income exceeds their county's exemption threshold, Washington also offers a deferral option at 5% simple interest, with a higher income cap around $67,000, repaid only when the property is eventually sold or transferred. In Kansas, beyond the circuit breaker credit I mentioned, the household income limit for the SAF-ESR program specifically applies to the current tax year, and the 75% refund applies to property taxes actually and timely paid, meaning if you miss a payment deadline, even temporarily, it can affect your eligibility for that specific year's refund. I want to address the 4 most common mistakes that disqualify people from property tax relief they'd otherwise be entitled to, since avoiding these is often more valuable than any single piece of advice about which program to apply for. First, transferring your home into a trust without first checking whether your specific state's senior exemption program recognizes revocable trusts, since some do and some don't, and an improperly structured transfer can inadvertently disqualify you. Second, renting out a portion of your home, since most programs require that more than half the property remain owner-occupied as your primary residence. Third, adding an adult child directly to the property deed, since co-ownership can trigger a reassessment or disqualify the senior exemption in certain states, even when the intent was simply estate planning rather than anything related to property tax avoidance. Fourth, and this is genuinely the most common mistake of all, missing an annual recertification deadline in states that require yearly refiling. Since most assessors' offices don't send a proactive reminder, and recovering a lapsed exemption after the fact is rarely possible until the following cycle. Let me also address the Medicare premium correction in more practical detail. Since the SSA-44 process has specific documentation requirements worth understanding clearly, you'll need to identify the specific qualifying life-changing event, work stoppage being the most common, and the date it occurred. You'll need to provide your estimated income for the current year, supported by documentation such as a letter from your former employer confirming your separation date, or your final pay stub. The form itself takes roughly 28 minutes to complete, according to the SSA's own estimate. Once you have your documentation organized, and it's submitted either by mail or in person at your local Social Security office, not online. On vehicle registration and public transit discounts specifically, I want to emphasize something practical. Because these vary so significantly by state and even by individual transit authority within a state, there's genuinely no single national resource that aggregates all of them. The most reliable approach is a direct search for your specific state's DMV senior discount page, and separately, your local transit authority's senior fare program page, since these are typically 2 completely separate applications administered by 2 different government bodies, even though both relate to transportation costs. Let me address something specific about the National Park Senior Pass that's worth knowing if you're considering it. The $80 lifetime pass covers entrance fees and standard amenity fees for the pass holder and accompanying passengers in a single vehicle at most sites, or up to 3 additional adults at sites that charge per-person fees. This means a couple traveling together, or a senior bringing grandchildren along, generally doesn't need to purchase a second pass, since the existing pass covers the vehicle or the accompanying group, depending on the specific site's fee structure. Given that many individual national parks charge $30 to $35 per vehicle for a single visit, even occasional use of this pass across 2 or 3 parks in a single year more than covers its one-time cost. I also want to mention something about the circuit breaker credit category specifically. since the distinction from a standard exemption genuinely confuses people. A standard exemption reduces what you owe before you ever pay it, lowering your tax bill directly. A circuit breaker credit, by contrast, refunds a portion of taxes you've already paid, typically claimed when you file your state income tax return the following year. This means circuit breaker programs require you to have actually paid your full property tax bill first, then claim the credit afterward, rather than reducing the bill up front the way a standard exemption does. For seniors managing tight monthly cash flow, this timing difference matters, since a circuit breaker credit doesn't help with the immediate burden of paying the bill itself, even though it does ultimately return money to you. Let me close with the broader point I think ties all 12 of these together. Every single item on this list exists because lawmakers, at the federal, state, or local level, specifically decided that seniors deserved this particular form of relief. None of it is a loophole, and none of it requires you to do anything ethically questionable to access it. The only reason any of these go unclaimed is that the application requirement creates a barrier that purely automatic benefits don't have. And that barrier disproportionately affects people who simply never heard a program existed in the first place. If you take one action from today's video, let it be this. Pick the single item from this list of 12 that seems most likely to apply to your own situation. Whether that's the property tax exemption, the vehicle registration discount, or the senior bonus deduction, and actually look it up this week, rather than filing this information away as something to check eventually. If this was useful, share it with someone you love who's over 60 and who may be paying full price for several of these things without realizing meaningful relief genuinely exists, specifically designed for their situation. One final area I want to address before closing because it connects directly to a question I get asked constantly. What if you've already missed claiming one of these for several years? Can you go back and recover anything? The answer depends entirely on which specific item we're discussing. For the senior bonus deduction, if it was missed on a return you've already filed, an amended return using Form 1040-X can recover the refund, with a deadline of 3 years from when you originally filed or 2 years from when you paid the tax, whichever is later. For property tax exemptions, most states do not allow retroactive application beyond the current tax year, which is exactly why missing the filing deadline once typically means waiting until the next full cycle, rather than recovering anything from prior years. For Medicare premium corrections through SSA-44, the adjustment generally applies going forward from approval, rather than retroactively covering months you already paid the higher premium, which is precisely why filing promptly once you become eligible matters considerably more than people initially realize. This pattern, where some benefits allow retroactive recovery and others genuinely don't, is worth understanding clearly because it changes how urgently each specific item on this list deserves your attention. The items with no retroactive recovery option, property tax exemptions and Medicare premium corrections being the clearest examples, are exactly the ones where delaying costs you real, permanently unrecoverable money. The items that do allow some retroactive correction, like the federal tax deduction through an amended return, are still worth addressing promptly, but at least offer a path to recover what you missed if you've already let some time pass. I also want to address something for anyone managing this process on behalf of an aging parent, since a meaningful number of successful claims happen specifically because an adult child took the initiative to research and apply on a parent's behalf. For property tax exemptions specifically, most states allow you to assist with the application process, though the property must remain in the senior's name, and they typically need to sign the application themselves, unless you hold a properly registered power of attorney. For federal tax matters, including the senior bonus deduction, you can help gather documentation and even prepare the return, but the senior still needs to review and sign it, or formally authorize you as their representative through IRS Form 2848 if you're handling matters more extensively on their behalf. Let me leave you with a final thought that I think matters beyond the specific dollar figures I've covered today. The cumulative effect of claiming even half of these 12 items, rather than none of them, can genuinely transform a senior's monthly budget. Property tax relief alone, combined with the senior bonus deduction and a Medicare premium correction where applicable, can easily total several $1,000s in a single year for the right household. None of this requires extraordinary effort. It requires knowing these programs exist, which is exactly the gap this video was designed to close. Thank you for spending this time with me today. If any part of this applies to your own situation, the most useful next step is picking just one item from this list and actually looking up your specific state or program's requirements this week, rather than treating this as something to revisit eventually. I'll see you in the next one.